Hi everybody and welcome to the London Session Update with myself, Kathleen Brooks, on Wednesday the 27th of March 2013. Well, we've seen a big decline in the euro today. That has been where the bulk of focus and attention has been on. Unfortunately, I don't have charts due to a technical issue, but do bear with me. I will talk you through the main levels you need to hold. We went sub 128 today. This was on the back of a few things. Number one, Italy can't form a government. The head of the centre-left, Pierluigi Bersani, came out today and said it. He goes, I can't form a government. And he also added that anyone who would want to run this country is mad. But we'll leave that to one side. So in the short term, that political uncertainty is causing an awful lot of downward pressure to build on the euro. We got sub 128. That's the lowest level since November. Right now, the next key level to watch, 127.55. And those lows from November, which was 126.60, that looks like the level that we're targeting right now. In the longer term, though, we tend to think that Italy not forming a very fragile coalition government could actually be a good thing, largely because it may mean that a technocratic government could come in and could potentially carry on with the reform path that former Prime Minister Mario Monti had started while he was head of a technocratic government as well. So we're going to be watching that one very, very closely. Now, the other thing, of course, is Cyprus also weighing on the euro. The problem with Cyprus now is that its banks are meant to be opening tomorrow. We're hearing some trickling through of what capital controls will be in place, but I think it's really focusing minds now that Cyprus is going to be one of the first country in the Eurozone to have capital controls, and that is not currency positive. Now, as we said, like further downward pressure now, we think we will get to 126.60 in the near to medium term. Likewise with the pound, we saw a sharp drop in the pound back to that 151 level. We've actually, in the cable rate, we've actually managed to find a bit of support, and that's largely because euro sterling has been on downward trajectory as well. But what really weighed on the pound today was a much sharper deficit, or much larger deficit, in the current account for the fourth quarter. And remember, you get a large current account and trade deficit. The two of those should be currency negative. So we've been fairly uninspired by this rally in the pound. We haven't managed to get above 152.20, and we think we're going to slowly drift down back towards that sub 150 level over the next couple of weeks as we get more and more data that will give us a better picture of whether or not we did slip into a triple dip recession in the first quarter of this year. Now, the other thing I want you to watch today is dollar CAD. At 12:30 London time, we're going to get CPI for Canada. What's been interesting is that the CAD has really lagged behind the rally in other commodity block currencies, and also it usually follows the US dollar. It hasn't done that at all. However, it's given the dollar a bit of a clobbering the last few sessions, whereby we've seen the CAD really strengthen back away from that 103 level, get back down well below 102 in recent sessions. Now, if we do get stronger than expected inflation today, the market's looking for 0.3% on the month, only 1% year on year, but it could reassess, the market may reprice or reassess just how dovish the Bank of Canada can be going forward. So do watch out for that. Added to that with the Canadian dollar, we also have GDP data for January, which is released tomorrow. So two important data releases. If we do get stronger than expected inflation, then we could get down to 101.25, which is the 50-day moving average. And then below there, the next key level of support is parity, really. But there's two reasons why we like the CAD longer at the moment. Number one, we think it's got a lot of catch-up to play. Those kind of inter-market correlations have really broken down. So we haven't seen the commodity currencies rally alongside stocks or elsewhere. And that, we think, could be reversed. So we could actually start to see the CAD really play catch-up. Secondly, it's going to benefit from US economic strength. So if we do see the US economy continue to outperform, then we could see the CAD being traded as a bit of a dollar proxy, largely because there's still QE3 in the US, which could cap dollar gains, but there isn't, of course, in Canada. So do watch out for that. Good luck trading for the rest of this week. There'll be no more London session updates until Tuesday. Have a very happy Easter if you're celebrating, and good luck trading for the rest of the week.